The broadcast is now starting. All attendees are in listen-only mode.
All right. Hello, everybody. Jim Cagnino with Infinity Futures. We're going to get started here in a couple of minutes. It's 9:57. We'll get started pretty much on time. Trust that you could see the screen. It's just our website. There's nothing exciting yet. Well, I think the website's exciting, but you might not think it's so exciting. Hey, Mike. Hey, Dave. Polly. Radek. Okay. Awesome. Sweet. Thanks for coming. Yeah, we're certainly seeing some exciting markets right now, and we're going to talk about those in detail as we go. Appreciate everybody coming in today. So listen to me. We'll be about an hour and 20 minutes at the most. I'll answer questions as we go, and we'll talk about the micro E-minis. Mohammed, good morning. Good to see you again. I'm going to turn down the volume on my Bloomberg feed so it doesn't cause us any problems today. Michelle, you're back again, the second time in a while. Good to see you. Carl from Mexico, sweet. Maj, welcome. Yeah, I'm in Chicago, Illinois. I'm going to call it the cradle of futures trading. New York City, Poland, Toronto. Yeah, we have folks from all over here today. This is going to be good. We have a big group in. I'm glad you're able to find the question and answer box. Elvis from Jersey, sweet. Guatemala is represented here today. Ellen, Richmond Hill, Canada. Calgary, Montreal, San Diego. I sound like a robot? Hang on, let me fix that. I have this new headset, and is that any better? Let me just kind of tweak it a little bit. Sounds fine. Okay, yeah, I apologize if it sounds a little robotic. Hopefully it's not echoey. It's a brand new headset. Steve from Switzerland, New Delhi. Steve, by the way, I visited Lake Brienz in Switzerland, which is right off of not too far from Interlaken. Spent a long weekend there. It's beautiful, of course. The Villages, Florida, Antioch, California, Ireland, Santa Cruz. Sweet. All right, we have. Where's my mouse at here? All right, it's 10 o'clock. Let's leap into action here, everybody. Thank you so much for coming today. My name is Jim Cagnino with Infinity Futures. And before we jump into today's event on the micro E-minis, I do want to point out trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes you have a high combination of leverage and volatility. And although that could be an equation for opportunity, it is also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition, money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly anger Mrs. Cagnina. Now, I know that last part might sound a little tongue-in-cheek, but stress in life does matter. And oftentimes when you're under stress, you make bad decisions. So take your time, be patient, and I think you'll do just fine. Past performance not indicative of future results. We're not going to talk about past performance. And then anybody who does talk about past performance in a presentation, be careful with that. That's usually reserved for, CTAs that are approved by the government, that have a certain procedure on how they have to actually post their past performance and things like that. So it could be a red flag, so be careful with that. And then we'll talk more about leverage and all that stuff as we go. Mike says, so I have a Mrs. Cagnina indicator. I do. It's volume based, and that is in volume as in volume on a chart. All right, so I got the good news and bad news. I'll give you the bad news first. The bad news is I do have a PowerPoint. The good news is we're not going to spend a lot of time on it. We're going to shoot over to the charts in a second, and then the trading platform in a second. So let's start here. Using micro E-mini futures to trade volatile markets. We talked about the risk already, so we went over this. Margins, the lower the margin, especially the day trade margin, the riskier the trade, right? It magnifies gains as well as magnifies losses, so keep that in mind. Flexible day trade margins are always something that we've provided customers, and we're pretty consistent in that application, but use them gingerly, use them at the right times and when you need it. Okay. Any questions on, how many contracts could I do based on my account size and all of those kind of things? Give us a call. We'll talk about it. We'll talk about what, what might be appropriate, what might not be appropriate, what times of day it's a good idea to do it, what times of day it's not a good idea. Remember, these are 23-hour markets, so you could start trading at 5 p.m. at night, and it goes all night, all morning, all day till 4 o'clock in the afternoon. And I'm going to reference Chicago time a lot because I'm in Chicago, so that's Chicago time. All right, stock index futures. There's four main ones that we like to talk about. There's the S&P 500, right? These are your large cap stocks. Large cap stocks are the big ones, right? They have a large market capitalization. NASDAQ 100, it used to be referred to as the tech stocks, but it's the FANGs and the tech stocks. But there's healthcare and other things in that index. There's only 100 companies in that. And then the Dow Jones, of course, is blue chip. Those are the small, blue chip stocks are the big ones. And then Russell 2000 are mid cap stocks. Halim asks, am I muted by organizer? Yeah, you are, because we have hundreds of people in here, and if everybody talks, it won't end well. So, yeah, you are muted, but thanks for coming. Michelle, the only thing you're seeing right now is a go-to. Michelle, you should see. Yeah, let's double check here. I'll refresh it. I'll refresh the. Make sure everyone sees that. You should see a PowerPoint. Give me a thumbs up if you do. All right, Michelle, you might have to log out, log back in. I'm not sure. Looks like everyone's good. So, all right, so the major stock indices, right? These are the ones, they're on the news. They're frequently quoted. They're used as benchmarks. And these are the ones that the main futures ones we're going to talk about. So the futures contracts, they come in two flavors, right? There's the classic E-mini, which we've all known about for many, many years and traded them for many, many years. And then there's the micro E-minis. They're relatively new. I don't know, a year old maybe. I can't really remember the exact date they were launched, but they're 1/10 the size of the classic, right? And when they first came out, I was like, oh, that's $1.25 a tick for an S&P. What's the big whoop? But now, with all the volatility that we're experiencing and the average daily ranges and the huge bars and the fluctuations, suddenly the micro E-minis become very attractive and very important tool to actually trade. Okay, so S&P 500 was a $50 a point or per handle or per point in the classic E-mini. The micros were 1/10, $5. NASDAQ, $20 a point. The micros, 1/10, $2. Dow Jones, $10. I'm sorry, did I have that right? $5 mini Dow, my bad. $5, and then 10th is 50 cents. Russell 2000, $50. $5 for the micro. Okay, so other than that little hiccup in the Dow, we're good. And I'll pull up a Dow chart, dome, so you can see it's $5 mini Dow, not the 10. That's a typo, 5. Okay, notional value futures contracts. Notional value is how much you control, what the value of your contract is. And remember, in futures trading, you're trading contracts, not shares, right? They're standardized sizes, they're standardized contracts, they're all the same. And so a notional value is how much one contract is worth. And so what I've done in this chart is I've kind of laid it out. So I took a snapshot price from yesterday, and I applied the multiplier, and I came up with the notional value of each contract. So for the classic E-mini, the notional value is $141,850 per contract, per one contract, at a price of $28.37. The micros, of course, are 1/10 that size. So still $14,185 worth of stock index you're controlling with a micro. So micros aren't mini. Okay. And remember, SPY Spider is, it was trading at $283. And even if you had 2-to-1 leverage, you were still, you weren't controlling that much market cap with your capital, with the amount of money you have invested in your account. So futures trading, the leverage it could be good or bad, but keep in mind that you have a more efficient use of your capital. That's kind of number one. That's an important part. Okay. The other important parts, of course, are you can instantly get in and out, short or long, long or short, short or long, long or short, without delay, without waiting, immediately, right? And then lastly, it's a 23-hour time frame. So you could do stuff after hours. If you anticipate late night earnings, you're able to trade the European session or the Asian session. All of these things are benefits. Now the micros and the classic E-minis, they're fungible, right? So in other words, 10 micro contracts equal 1 classic ES contract. Okay, they're different markets, but they're fungible. Now, as an example, 5 micros would equal a half of an ES contract. So now we're starting to see the power of fractional trading, right? If you don't want to do a big one, or maybe you don't want to do 2 big ones. You want to do 1.5 big ones. You could do that now with the micros. You could have a fractional position, a fractional average position, using a combination if you want to use a combination. Some people don't, some people do. Exchange and day trade margins are proportionate. Okay? Craig was quick to pop in Craig, quick to pop in. May 6, 2019 micro launch. Thanks, bud. Okay, so it's proportionate, right? The exchange and the day trade margins are proportionate. So let me give you an example here. So let's say a trader went long 1 E-mini, or bought 1 E-mini, and then sold 4 micros. Your position would be long 6 micros. Or another way of looking at it is your position would be long 0.6 micros. 0.6 classic, sorry. So that makes sense. So you could think of it 2 different ways, whether you're long or short a fraction, or you're long or short a multiple, and that's the way the math works. It's really easy, basic, simple math. Okay, so let's fast forward into the coronavirus paradigm, the crude oil war paradigm, and all of a sudden we're in a brave new world where we have very large ranges. We have very large volatility. We have exceptional price movement. And here's an example, and I'll show this on a chart, where we have one 30-minute candle where a high was 28.20 and a half and a low was 27.17 and 3/4. And this was Sunday night on the open at 5 o'clock, 5:30. 102 candle move, 102.75 to be exact, or points. In futures trading, we call a point a handle. You might not have that kind of terminology in other types of trading, but in futures trading, we call it a handle. And so, for a classic E-mini, you multiply it, it's $50 per point, as we saw in the earlier slide. You have a move, a 1 contract move in 30 minutes of $5,137. That's a lot. The micro, the same move in the micro, 1 micro, since it's 1/10, is only $513. So now you start to see the attractiveness of protecting yourself and being more patient, and not and having a little bit more control over where you place your stop, where you get in, what your P&L is, when you could kind of tone it down to take advantage of these extraordinary large ranges. Before the micros, you couldn't do this. Before the micros, you couldn't do this. You were, you had to be on your ball, because that's a lot of money for 1 contract. What if you had 10 contracts on? $51,000 in 30 minutes? I wouldn't be able to handle that. Then Mrs. Cagnina would be really upset. So, but yeah, volatility sure is good, and we're going to talk about placing stops and all, best practices and all that stuff in a second. All right, so we're almost done with this PowerPoint. We're going to talk about today some strategies that might be good with these kind of extraordinary markets. And we didn't see this kind of volatility last year, the year before that. I mean, this is exceptional. Opportunity, risk, it's there. Targeted limit order entries far away. I always like to say, enter the market on a limit order. In other words, pick up not a market order, but a limit order. And this is my personal opinion. This is my preference. You could place a limit order further away from the last traded price, whether it's you're buying or selling, it doesn't matter, because statistically, at least recently, those bars are going to be bigger. The average 30-minute, 15-minute, 10-minute, 5-minute candle is bigger, and we'll show this graphically in a second. You could scale in at different prices with micros, right? You can buy one at 10, buy one at 5, buy one at even, and then your average price is lower, right? And then you could scale in or even scale out with a combination of minis and micros, right? I mean, you could have a classic mini position and scale out of it with micros, or scale and add to it with micros. So these are some of the benefits, and we'll kind of talk about those in a second also. Here's some contact information. I'll put this up at the end again, in case you want to follow us on YouTube or Twitter or Facebook. Phone number, ask for Jim Cagnina. This is actually my email address, believe it or not. Trade it. Well, there should be an S there. I wonder if I could edit this right here. There we go. Trade at infinityfutures.com. It actually goes right to me. So let's go ahead and take a peek at some charts. I'm going to go ahead and move it on over. Okay, so wow, that was awesome. All right, so this is the Infinity AT charts, and there's a lot of stuff you could do with these, and I don't have actually, you know what, let me put my trading ladder up also. Oops, my bad. Yes, I'm going to put the trading ladder up as well. This is the package, right? This is the package. The charts themselves are actually very powerful, and I'll talk about some of the features of them as well in a second. But you could trade from them. You could do a lot of stuff from them. And the trading ladder is kind of our keystone, our core ability to trade on a ladder right now. I'm going to talk about the ladder in a second, but let's focus on the charts right now. I pointed out that range I talked about in the PowerPoint slide. This is the candle, and this is, I mean, that's a gnarly looking candle. And I'm not sure if anyone uses the word gnarly anymore or not, but I just use it in the presentation. Feel good about that. So that's a spicy meatball. The same. Now let's toggle over to a micro chart. The same candle, again, $513 per contract instead of $5,137. Okay, so that just kind of shows you, and that's an extreme candle for sure, but it's not completely extreme. In other words, here's another one. Let's hover my mouse over the green candle. We have a high of 2770 and a low of 2712. That's, let's say, 58 handles. That's also a really big candle. We didn't see those in not too long ago. Here is another one. This is a regular candle at on Monday at 8:30 on the open, and it was another high to low is pretty big. And even some of the smaller regular candles are bigger than they used to be. Right. So that's what I mean by average daily range, average candle range, average range completely is it's bigger right now, and you have a better opportunity, in my opinion, to enter the market on a candle, on a bar, by being patient and placing orders kind of, gingerly far away in anticipation that there's a higher probability you might get filled. Okay, so that's kind of something I wanted to highlight here. I'm going to go ahead and let's just delete this drawing for now, and I'll delete this arrow for now. And we'll start out with just a flat scratch here. This is just a candle chart, 30-minute candle chart. You could change your time frames to anything you want. I'm just going to leave it up here for 30 right now. I have a moving average cross down at the bottom, and I have a CCI down at the bottom. And you could scale this over up and down simply with your mouse or with your finger if you're using an iPhone or an iPad. This is good on Macintoshes and all that stuff, just in case you're wondering. Okay, so what is scaling in? Well, before we let's talk about actually order entry before we talk about scaling in. Let's talk about what I'm talking about when I say place a limit order further away from the market than you ordinarily would have, right? So you could do a market order here, and it would, if I wanted to sell a contract right here, which is my inclination looking at this chart, it looks kind of ugly, I'd hit the sell button and I'd generate a market order, right, for one contract. And then you're just getting the best available bid or offer. There's no patience to that, right? You're just shooting it in there. There might be a time and place for it, but, I don't know if that's my cup of tea. So instead, what I'm going to do is I'm going to use the sell button on the right, and I'll show you how to do it on the trading ladder in a second, is I'm going to click on it, and I'm just going to drag it to a better spot, right? I want to drag it to a better spot. So let's just say I wanted to do a micro here at, I don't know, 2766. And I'm just making this up. Don't follow along at home. That's a good 9 handles above where the market is right now. In the old days, this would probably never get filled. But nowadays, it has a high chance of getting filled. So now I have a limit order up here, right? And I have to be patient. Patience is, in my opinion, I'm sorry about that. Let me get rid of that little flag. Patience, in my opinion, is the whole ballgame for day traders. It's the whole ballgame. Waiting. It's boring. And you guys heard me talk about this before for the folks that have been in my webinars before. It's boring. It's not sexy, but it might be a better way to go. So instead of being short at 27.58, if the market bounces around a little bit, let's make this a little bit bigger even so we could see it even better. These charts are really handy and moving stuff around, just dragging it. I'm in a better position being short up here than I am being short right here. Now, I know a lot of folks are saying, well, what if it doesn't get up there? Well, then you don't get filled. And that's the second best thing that could happen to you, right? The first best is you get filled and you make money. The second best is you don't get filled. And the third best, which is actually the worst, is you get filled and you lose money. Okay? Now, so that's what I mean by being patient. And you could do it on the downside as well. You could do it on the downside as well and pull it down here and, place a trade. And there it is. I got a limit order to buy down here if it gets down here, and I'm just going to wait. Okay. And these are easily changed. So you could just click on it, drag it around, cancel it, do whatever you want. And there's a lot of other features here on the platform that will enable you to take advantage of this, which I'll show. But before I do that, let me pull up a trading ladder here. I got a micro up. So let me go ahead and shoot up a micro. I'm trading on a simulator. Yes, I am. It'll remind you. It's at the back of it's blue coded, MES. There we go. Here is a trading ladder. This is a 10 tick deep trading ladder, which I wouldn't ordinarily use because I could, if I just use the 1 tick deep data, best bid or offer, it's only $1 a month instead of $10 a month. And all these extra numbers don't really help me. That's just my opinion. You have the option. You have the choice with Infinity to do whatever you want. Depth of market, $10. Non-depth of market, $1. You still get all the features of the trading ladder. Okay, you still get all the features of the trading ladder. Now, the trading ladder, will go up forever, right? There's my order here. This is my order here, 27.66. I can't even see it on my, if I center the price action, the dark blue line is the price. I can't even see my order on the trading ladder, right? Because it's so far away than it ordinarily would be. So one of the advantages of having the charts in sync with the trading ladder is you could place the charts on either device. Here, I'll place another order to sell one here. Oops, let me click, and quantity, and hit the go button. It shows up on the chart also. There's that label there. That's that actual trade. And I could cancel it, or I could move it. Click, and move it. And it's that easy to do. So what I really am trying to get across here is, on a chart, this doesn't look unreasonable where I put this sell order. And again, we might not get filled, but we might. Alternatively, on a trading ladder, it's harder to visualize sometimes, right? Because I'm going to have to scroll way up here to replicate this number, right? We're way up here, and the price action is going to go off the screen. By the way, on that note, cancel all is your friend. If you think you're flatten, just to double check. If you want to cancel any working orders that have scrolled off your trading ladder, hit that cancel all button. You also have a cancel all button over here on the chart itself. Okay, so that's kind of important. So scaling in, so now we can talk about scaling in, right? I have a limit order here. So now let's say I really want to get short, and I'm willing to sacrifice some movement here, and I'm going to go ahead and hit sell another one, and I'll make this one a little tighter. I'll make this one a little tighter. I'll put it right there. So now I have 2 orders in, right? 2 orders in, and here's my prices, right? Open orders, 27.66 and 27.62, right? So if I get filled on both of these, what's my average price? I'll be short 2 contracts, right? Or don't think of shares, think of contracts. I'll be short 2 contracts. Yeah, you could buy 100 shares of Amazon, and then buy another 100 shares later, and you'd also have an average price. But here it's immediate, and you can see it right there on your screen. Okay. So you would be short 2 from, dun, 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 that's right, Joe said it, 27.64. If you were filled on both of these, right? If you were filled on both of these. Now, I could do it again. I could sell another one. Let's put it up here. Let's be even more patient. All right, so now I have 3 contracts waiting to be filled. 3 contracts, and then I'd have a different average price. Okay, so this would be scaling in, and I mean, look at this particular candle pattern here. Let me just draw a real quick rectangle around it. Draw a real quick rectangle around it. Here's where price is since 7:30 this morning, right? There's where price is since 7:30 this morning. So we know that the market's it doesn't ever just go, I shouldn't say doesn't ever, because sometimes it does just go straight down. But generally it vacillates, right? Up and down, up and down, up and down. And you'll never sell the exact high, and you'll never buy the exact low. I mean, maybe you'll get lucky once, but that's really, that's not reasonable. That's not something to consider. Okay. In this particular case, and let's do another one. Let's go. All right. Let's say we keep going up here. Now I got a 4 lot. If I get filled out, if we shoot back up here, I got a 4 lot, and then of course I could place my stop above that. Placing a stop is best practices, and that's the way to do it. If you're scaling in or not scaling in, it doesn't matter. So let's go ahead and place a sell stop anyway, just to show you how to do it. I'm going to go ahead and hit sell. Remember, I'd be long I'd be short 4 contracts, 1, 2, 3, 4. So I would have a buy stop. I'm going to move the slider up here, or the trade ticket, or whatever you want to call it. I would change my lot size to 4, and I would click that buy button. Okay, so now I have a buy stop, and you could tell it that it's been sent to the exchange because the label has a solid line on it, a solid green line. That, green is buy, red is sell, and then solid lines. And if you go to your trading ladder, you want to scroll up, there's a trade, there's a trade, there's a trade, there's a trade. They're on there. They're on the trading ladder also. Okay, so that's how it's set up. Now it looks like this market is actually going away from us, so maybe we won't get filled, maybe we will. We could sit here all day if we want. But you're going to have a strategy, right? It's 10:30, right? We're going into the lunch hour. It's 11:25 East Coast time, right? So volume will be a little less than it is on the open. Volume will be a little less than it is on the close. But the market never really sleeps. It's always moving, so there's always stuff that could happen. So right now, this might look like a bad trade idea, but in my opinion, it's not. And I would sit here. I would sit tight. And I haven't even put a volume profile up on the screen yet. Ronaldo asks, I'm assuming it is okay on Windows and Androids as well, right? Yeah, Ronaldo. So the trading dome itself, requires a PC. Okay, this trading ladder, it's called, or matrix, or dome. This requires a PC, and there's 2 versions. There's one with the 10 ticks deep on the bids and offers, where you can see the bids and offers 10 ticks deep, and there's one with bids and offers just 1 tick deep, which is my preference. The bids and offers, and especially in these markets, move so fast, they get canceled, they get changed. It doesn't help with my trade decisions. And again, that's my personal opinion. Okay, if you're just trading on a Macintosh, you could use the chart and the chart trader, and you don't need the depth, obviously, and It'll go on an Android or anything. So to answer your question is, yeah, any supported device, it'll work. Ron's asking me, how am I determining my entries? These are demonstration trades. Don't take these. Don't follow blindly. Don't follow blindly. But what I've done is I've said, all right, here's the range since early this morning. Well, not even early this morning. Here's the range in market profile. I'm sorry, volume profile would actually help with this. But it's 7:30. Here's where we've traded in this range all day. We've traded in this range all day. Buyers and sellers are happy to be in this range today. Now the range is huge. It doesn't look huge on the chart, but it is. It's 2751 up to 2781. That's 30 handles, if I did my math right. And then for a micro, it'd be $30 times 5 per contract. For a big one, it would be $30 times 50 for a big classic E-mini. So the dollar value is not a small amount of money. If I were to get filled on all 4 of these, I would be short 0.4 classic E-minis. Okay. Yeah. So these are I just threw these in as examples. Don't. I like the idea of being short right now, but don't follow along blindly. John, the purpose today is really to focus on why, how the perfect timing of the introduction of the micro contract, and how that could be used, and how that could be used in conjunction with the big contract. That's the idea. So that's what we're doing here today. All right, there's a lot of questions I'm missing. I'm going to go back and get these. For instance, how do we get the blue box when you're on a candle? Stephen wants to know that. Well, all I'm going to do here is on the upper top here, I'm going to take off my crosshairs, and I'm going to click this little info box. And then once this info box is surrounded with a blue box, it's activated. I don't have that activated. I don't have that activated. It's just this middle box here. This looks like a dialog box. And I just put my mouse over the candle I want to inspect, and it provides me with the information on that particular candle. Okay. All right. So I'll come back and I'll scroll through these and get most of these. I'm going to call them functional questions answered as we go. Indicators. All right. So there we heard a ding, right? I heard a ding anyway. So it looks like we've sold one. Remember, I'm in a demo mode. Sold one MESMO. That's Micro E-mini June 2020. That's how you read this. Let me go over to the left. M is for micro. ES is for E-mini S&P. That's the basic core of that symbol. M is for the front month, which is June, which is where all the volume is. And 0 represents the year 2020. Okay, that's how you read that actual contract. So right now, on our actual, we sold one of the 4 we wanted to sell. Right, we sold one of the 4 we wanted to sell. And this is a good question. Well, if you're just short one, why do you have a 4-lot stop? If I'm just short one, why wouldn't I have a 1-lot stop? Well, if the market does get up here, by definition, I will be short 4. The market can't jump over. The market cannot jump over my order. It's a limit order. And that's one of the great things about trading futures is it's literally you're first in, first out. The CME group treats our orders first in, first out. So, I put these 2 orders in a while ago, so I'm in line to get filled. Market can't go through me. I'm blocking the market. I have to get my fill. So that's why that is. So now we're short 2, right? We're short 2. And then we have an open trade equity of minus $22.50, minus $25. And, we're still retracing back up. And everything is good. Now, the one component of this trade I don't have is a profit target. Okay, so we're going to do that. We're going to put that in right now. Let me just lower this thing up. So here's the tricky part, and I'm not doing this with brackets. We do have server side order triggers order here on the charts. We have server side OCOs here on the chart. In this particular case, we're short 2 right now, right? So our profit target right now, we have to assume could only be 2. And there's a couple of different ways to put it in. I could do 1 2 lot, or I could do 2 1 lots. Let's go ahead and do 2 1 lots. I'm going to hit the buy button, right? Because I want to buy it back at a lower price. Let's drag it down toward the bottom here, and I don't know, make this a 1 lot. And I'm going to hit the buy button. Okay, so I have one contract here to buy down. I don't know, what's this price? It'll show me what this price is. Buy 1, 27.53.5. Okay, so now if the market comes back down here, I would buy 1, and the math would necessitate I'm only short 1 micro now. Alternatively, I could also add another target, which I'm going to do, and let's say, oh, maybe we'll break down even further. I'm going to come down here to 27.48.5. I'm going to buy another contract. I got 1 lot selected. I'm going to hit buy. Okay, so now I'm able to scale. I could split my profit targets to 2 different price levels, right? I could split it to 2 different price levels instead of just having to. If I was just doing 1 classic E-mini, I'd have to get out of 1 classic E-mini. But now I have the ability to switch it up. All right, is everybody with me? Okay. Let's talk about now. We've been just doing micros, right? We've been doing micros, and I'm going to go ahead and minimize this. I'm going to pull up another. And by the way, most of these markets are really, really great markets to trade futures. And energies include crude oil is the big one. Everything to unleaded gasoline is another energy market that's popular. We have natural gas that's popular. We have currencies, the euro, 6E, British pound. All of these things are also kind of popular. I know I'm a little bit off script right now, but treasury bonds, treasury notes, those are another asset class completely. Let's go ahead and add a DOM for the ES. All right, so here's the ES DOM. So this is micros on the left, ES on the right. If you wanted to have 2 trading ladders up, you could do that too. Let's do that just for demonstration purposes. All right, here we go, side by side. And one of the things that's kind of cool when I did that is you can see the bid offers on the classics are a little bigger. They're bigger. But the bid asks on the micros are also decent, which means typically a tight bid ask spread, which helps reduce our transaction costs. Lou, there's no mini for bonds, unfortunately. Sorry about that. There is for currencies, and then there's a half-size contract for crude oil. QM, I think, is the symbol. So all right, so I have so this is it kind of shows you that these are liquid, and it shows you that these are very liquid. The ES. Okay, I'm going to lower this for a second. Now on the left-hand side I have the micros, on the right-hand side I have the classics. So now if I were to, I'm just going to go ahead and buy one at the market just for demonstration purposes in the classic. All right, so now I'm long one. My average price right here is 27.66, but I'm not really long one because I'm short 2 micros. So I'm really only long, you ready for it? 0.8 classics. They're fungible. They're completely fungible. So that's kind of a neat feature. If you wanted to be long or short at a classic, but not a whole one, you could use this technique to do that. Okay, and then if I just wanted to get out, 1, 2, 3. I remember when 4 ticks were like, wow, I got 4 ticks in the ES. It was a big deal. It's $50 a contract. Now it's you blink an eye and the market's already moved 4 ticks either with you or against you. So that's kind of how that works. Any questions on that? Ronaldo, so Ronaldo has a good question. You don't want to. All right, so we got out of the ES. Now I'm back to short 2 micros. So we kind of did a little interim day trade in the middle of a longer position micro idea. Ronaldo, you need to. There's the anatomy of trade the anatomy of a trade is what I'm showing on the screen. You have a position, you have a stop loss, and you have a target. These three things should be known ahead of time. Now, I'm not saying gold micros have a futures also. Sorry. Sorry, I'm all over the place. This is all stuff that's popping in my head. Craig reminded me. That's the anatomy, right? This is basic best practices, position, target, stop loss. And you should know this before you even start your trade. And I'm not saying you can't change your stop or you can't change your targets. Once you have a position, you can, but kind of basically know where you're getting in and getting out. That's your risk. So Ron, don't let your broker be your risk backstop, because they're really not. Okay, you got to have your own risk backstop. You have to know the lick value of your account, and then what your margin should be, what your leverage should be, and then what your trade is. All right, so don't rely on that. You can't rely on your broker, risking you out of a trade. That's not your broker's job. Your broker's job is to give you data, to give you a trading facility, and to get you going. Okay. Hang on, let me see. Your questions are coming in really fast. So if you sell micros and buy classics simultaneously in the same account, they don't cancel or offset. Yeah, that's a tricky one, man. I understand it's hard to get your head around. These are two different markets, even though they're the same market. They're two different markets. Here, let me show you what I mean by that. Let's go over here. Let me cancel all this stuff. Let me cancel all that. I got a good demonstration here for this. Get out of there. Okay, so let's get rid of that. Let's delete this. Let's delete the clutter for a second. I'm just gonna turn on a line on close chart. Line on close chart. Okay, this is the ES. Let's compare the ES to the NQ. NQ. Put the NQ up there, and we'll compare it, and we'll show the two lines. And these are generally in sync, right? They're highly correlated. They're not perfectly correlated, though, right? And you can see that they're not perfectly correlated. Let's just kind of zoom in a little bit. But they're going the same direction, but they're not. This is a relative scale on the right, and they're highly correlated because they're both stock index futures based in the U.S. Now let's do a different comparison. Let me get rid of the NQ comparison, and let's do a micro comparison. MES. I'm going to do the micro comparison. Oops, I didn't do the micro comparison. I changed the symbol. I'm a little absent-minded. Let's compare the micro ES to the classic ES, and we'll see not only are they in sync, it's blue and white, but they're mostly identical. They're mostly identical. So the overlay chart is the same. So they're completely in sync from a price point of view, but they're two different markets. So yes, you could be long in one and short in the other. And again, the math will work. 10 micros equals 1 classic. So if you're long 10 micros and short 1 classic, you're really flat. You don't have a position. And so that doesn't really make sense to do that, right? That's just a commission generator, which, it's not good for you. So don't do it. Again, fractional, it's good. Hopefully that answered that question. Lou, the answer to your question is no, I apologize. Okay, thanks, Ronaldo. Your average price is going to show up on the trading ladder. Let's get out of here. Let's go to let's go back. Let's set this back to where we were. Oh, here we go. Yeah, your average price. Let me pull up the micro dome. If you can't do the math, which I can't, but you'll see the dome does it for you, right? So there's this little red, orange, yellowish tag here. I'm short from this point. 27.64 would be the average the average price for that. So, and then here's open orders. The other cool thing about the chart, the other feature that I really like, if there on the positions bar right here, if you click on this closed book, click on that, it'll show you all the trades you made. These are closed trades. These are trades that we've executed. And then it'll draw little dotted lines to the price we made the trade at, and it'll attach it to the time frame or the candle when we made the trade. The second one, the lower one, the 2762, we made earlier in this particular 10 o'clock candle during that 30-minute time frame. And you could dig down and change your time frame to 15 minutes, 10 minutes, 5 minutes, and you'll get even a better analysis of when you placed your trade. And so that can be helpful kind of looking back in the course of the day and say, okay, this is where I sold them. This is where I bought them. These are the times of day I did this. Gee, did that make sense or not make sense? And it could help with your analysis. Okay. All right. Where are we at? So S, I'm just going to use your first initial because you don't have a first name, but your first initial is S. S, yeah, by doing the overlay chart, the percentage on the right is just a relative value. It doesn't really help you mathematically. I mean, maybe it helps you mathematically. It's just a relative value between the two. Okay. So we've talked about placing limit orders further away from the market to be patient. We've talked about scaling in and scaling out. We've talked about the mathematical relationship. And remember, the margins are also mathematical, right? So they do offset. Keep that in mind. Let me pull up the question box to the main screen so I can see these a little better. I know there's a lot of them. Okay, so all right, so even if you've had, all right, so a couple of questions here on how I try the trading ladder and how I try the charts. Let me just real quick show you how to get that. It's real time. It's good for 30 days. I don't know what happened to my my website here. Free practice account button right in the middle. Call it a demo account, call it a practice account, whatever it is. It's real time. It's the exact same stuff you're going to get if you're live. The background is light blue. The charts say demo. Fill this form out, and you will get an immediate email with the username, password, and instructions on how to get started. Okay, so it's simple, straightforward, real easy. We have customer service representatives that stand by the phones ready to help you if you need any help or you have any questions. They'll reach out to you. You can reach out to them. You can reach out to me. My name is Jim Cagnina. With my email address, believe it or not, is trade@infinityfutures.com. Unfortunately, since I get a lot of emails, but that's okay. You could use that if you want to contact me or call me. Feel free to call me. Okay, so that answers those questions, I think. We're getting close here. We're getting close to our first target. Just wanted to point that out. I don't want to forget about this. I don't know if we're going to get it. I don't have a crystal ball, but we're getting close here. 2753. 2753.5. It's this one right here. So we're about 3 handles away, which is reasonable. Let's show it. Oh, I have a big one there. Hang on a second. Let me get my other dome up. We'll show the micro. Okay, so let's pull that over here. I wish I had more real estate. I'm gonna hit center button. There you go. You can see it. There's a target right there on the trading ladder. There's a target right there on the chart. So the MO after ES, remember it's ES. June is the front month. There's 4 front months a year, so June's going to be good for a while. And 0 is that's a 0, not an O. 2020. That's just the ticker symbol. It's not a biggie. Got those ones over. Okay, how do you put an OCO order on from the charts? Henry asks, how do you put an order? For those of you who don't know what OCO orders is, order cancels order. Okay, order cancels order. Let me show you how to do that in the charts. That's a good question. Let's go back to this screen. Let's go ahead and change this back to the candle chart. Let's go ahead and change it to ES so we don't interfere with our MES trade idea there. And then we'll go ahead and I'll show you how to do that. Activate the trade area with the yin and yang button in the upper right. That's 2 arrows up and down. Now, if I want to, let's go ahead and do an OCO, order cancels order, but you need to do an OTO first, and let me explain what that means. Let's say we're going to buy a contract. I'm going to hit buy, okay? Now, before I place my order, wherever I'm going to place my order, it doesn't matter, but I'm going to place an order. I'm going to, first of all, establish, let's put this down here a little bit and be patient. Let's follow my rule. Let's make this easier for you guys to see. I want to add an auto exit stop, right? I'm going to click on that plus button there, auto exit stop, because ultimately I'm going to buy one, right? This is going to be my limit order to buy one. I'm going to hit my auto exit stop, and it gives me another slider. I can slide up and down to place my stop loss somewhere, okay? Now, I could send the order like that, or I could also say, hey, I want to also at the same time apply a profit target, add auto exit limit. Click on the plus sign. And I'm going to drag that up to where I'd like to get out. I'm making up areas here, and I'm going to hit the buy button. So now what I've created is this first limit order, which has a solid green line attached to it. That is an OTO, order triggers order. Once this is filled, if it's filled, and right now my position is 0 in this market, ESMO 0. If it's filled, I'll be long one. I've bought a contract. You know, when you buy, it's called long. When you sell, it's called short. So I'll be long one, right? And at 27.52. Now, once it's filled, it will trigger these two orders. These two orders will be sent to the exchange as an OCO, order cancels order. In other words, I'll be long one. My profit target up here, which is now a child order, it sees ... It hasn't sent to the exchange yet. I'm holding it for you. It's in my pocket. When this gets filled, this gets sent to the exchange, and it becomes a live, active exchange order. This also gets sent simultaneously. It becomes a live exchange stop order. It's held server side, so you could log off and do something else. Or if you lose your internet connection, you're still okay. And then my position, my long position, will be bracketed. This is an OCO, order cancels order. So if I get my profit target up here, the red profit target at the top, then this stop will get canceled. If I get stopped out for a loser, then the profit target gets canceled. It's called an OCO. And it's a really handy feature. It's a really neat feature because you could put it in and then you could just let it go. And if you want to change a parameter, you just click on it and you could drag it around. You could drag it around to change. I'll get a little closer. Maybe we can get filled. Let's see it happen. Let's pull that up a little bit. I'm just going to try to get filled here real good. So I went ahead and replaced everything. And let's see what happens. Let's see if we can, there we go. So now I got filled. And these two, the OCO order now is kicked into high gear. Here's my profit target. I mean, this isn't proportionate, so this isn't really probably a good idea, but you could change it. And it's an OCO, order cancels order. Could move that up here. Hopefully that answers your question. That's how you would do it. You could do it from the trading ladder also. It's equally easy and effective and all that stuff. But the trading ladder, keep in mind, it's client side. So you need to maintain your internet connection for that OCO to kick in. That's exactly right. Good question. Is that Santo? I like that name. Long 1 ES in short 2 micros. And my net position is long 0.8 classics. That's my net position. Yeah, okay. So good question. The other stock indices that are in micros are the mini Nasdaq. They are the micro mini Dow and the micro mini Russell. Elvis has left the building, by the way. Elvis from Jersey left the meeting. Sorry, I had to say that. Um, all right, I think I got a majority of these questions. Oh, no. I got to scroll down further. Okay, so I think I got a lot of these questions, but every time someone asks a new question, the scroll bar gets crazy. So GC, William, yes. Michael's for GC, half-size contract for crude oil, and the currencies have micros also. All those markets are valid markets. They're good CME group markets. Commissions are a little different. Reach out to your customer service rep. They'll help you with that. We're deep discount, low fees. Charting, this is all free, by the way, with 10 round turns per 30 days. So we'll charge $12 for the charts a month if you don't trade. Almost everybody meets that commitment. It meets the 10 round turns commitment. And a round turn, is, I'm 2x3 right now. I just did two and a half round turns. By the time I get out, I'll have done 30% of my monthly, commitment to save the $12. Otherwise, it's $12. I mean, it's less than a tick in the classic E-mini S&P. Small amount. All the exchange fees and stuff apply. There's no way around that, but that's okay. I mean, it's not for most of us non-professional traders we're categorized as. It's not shouldn't be a big deal. Let me scroll down here a little bit. When price move, okay. So Joe asks, I'm going to say Jew. I apologize if I say that wrong. JOO. Jim, where is the indicator which you introduced about indicating price outliers? I think you're referring to volume profile. I'll show you that real quick. What time is it? We got some time still. Not too much time, but we have some time still. Let me go over to studies. I'm going to add a thing called AT volume profile. It's right there toward the top, AT : volume profile. There's another volume profile lower down on the list, which I would not suggest you use. I suggest you use this one, AT volume profile. And I'm going to click on that, and you can kind of see a faint pattern in the back here, right? But we're going to go ahead and fix that. I'm going to go back to studies. Now that I've added volume profile, it's up here under current studies. These are the current studies I have on this chart view right now. I'll click on that volume profile, and I'm going to make some adjustments to make it easier to see and make it more useful. I'm going to make the bar height of the histogram a little bit bigger. And just so you guys could see it better, I'm going to bump it up to 8. So 8 ticks or 2 handles or 2 points. POC length, I'm going to shrink it a little bit so we could see it better on the chart. Opacity, I'm going to increase that a little bit so we could see it better on the chart. I'm going to add some numbers. And I'm going to keep a start. You could change the start time, but I'm going to keep it at 1700. What does 1700 mean? That's basically 5 o'clock last night when this particular trading day started. Remember, it's a 23-hour market. You had 23 hours to 17, and you get 1600. This is the end time. If you prefer to change it to midnight, roughly, when Frankfurt and Eurex opens up in Germany, you could change it to midnight. If you want to change it to, UK, when UK opens up 2, or when New York opens up 8:30, whatever volume you want to see, you could change it. I'm going to keep it there right now at 1700. I'm going to change the colors a little bit to make it easier for you to see. Make it light blue, and we'll make this light gray. Now I'm going to hit OK. So I think, Joe, this is the what you were asking me. You know, here's a technique to see volume profile, and what it is each histogram shows you what the volume was for trades during that interval. And these are 8-tick intervals. I made it 8 ticks so it's easier for you guys to see. And that's what that's showing you right now. Okay, and it gives you a number, and you know, graphically you see that the bigger the bar, the more volume traded at that price. And the biggest one is called the point of control. This is the pink one. And oftentimes, once a trading range has been established, the point of control is kind of important. The market likes to go to the point of control, and it's buyers and sellers feel that this is a fair price. You know, I don't know. There's probably some more news that's going to come out today, which could move things around a little bit. But right now, I like that as a target or a place to place an order. Either way. The meat and potatoes here is called the value area. This is where most of the activities happen today. And it kind of roughly corresponds with that rectangle that rectangle I made, which wasn't that magical actually, but let's go ahead and just make the rectangle again. Kind of framing the conversation here, kind of matches with the value area, the gray bars. And, you know, up here obviously was when, you know, early this morning when the market broke down, 2 o'clock UK time, boom, market broke down with a small amount of volume. Now traders are involved here after, what time was it, 7:30? And we have a lot of consensus on price. So these are kind of areas I look for entries and stops. Transition between value and prices above value, point of control, and highs and lows, prices below. I think that was your question, because that's, you know, if you've come to my webinars before, you know I like to talk about volume profile. All right, hope that helps. Let me just kind of scroll down here. We got a few more minutes here. We're getting close to overtime. So Ryan, I think we went over this. Are you hedging one for the other as a stopgap? Yeah, I mean, so when you think of hedging, you know, you're trying to, you know, when you scale in or scale out of a position, you're trying to take advantage of the natural price action that these candles will give you. You know, since we've been talking, we've had a high of, I'm going to eyeball it at 27.70 and a low of 27.52, or about 18 handles. 18 points. And so there's that natural tendency to vacillate, right? To go up and down, you know, oscillate. Oscillate's a better word. You know, up and down, up and down, up and down. And because of that natural phenomenon, scaling in with micros versus an E-mini, or, you know, having a simultaneous position and scaling out with a micro could be a really good strategy, since the micros, you know, for ES is only $1.25 a tick. It gives you that flexibility to whittle away at a position or to add onto a position in smaller increments. And it's infinitely better than trying to trade the SPY. Could you imagine trying to do this with the SPY? With an SPY ETF? Forget about it. Options? Or my Italian's going to kick in. Forget about it. I mean, you have you know, volume crush, a word that I learned this morning. You have you know, extraordinarily large bid-ask spreads. You know, you pay a lot of premium for this, for these instruments, volatility premium for these instruments, and you can't trade them like this. You cannot trade them like this. You take a position, you hope and pray, and then you hope you don't get too ripped off on your price. I know, I'm sorry, I'm biased. I'm a futures guy, but that's kind of reality. Sorry, I'm off the beaten track here. My bad. All right, let me scroll down a little bit. We're getting close to the end, guys. I'm going to show you a couple things too. Hang on. All right, so this is a really good, all right, time frames. You know, when we talk about volatility and we talk about volume, time frames are important. Let's take a look here at this chart. We have, you know, 2 o'clock in the morning. 2 o'clock in the morning. We had a pretty big move all the way until 7:30. But this volume is going to be less than the volume it is at 8:30, right? So the volume is going to be less. So by entering with the micro here, you don't have to worry as much about there not being enough volume because, again, you're only risking 1/10 of the contract. Does that make sense? Okay. Don asks, does Infinity have a tool like this that works with the SPX? Well, the ES is the SPX. ES is the SPX. It's the S&P 500 and a futures contract. So yeah, we do. I don't mean to be flippant. I know I get really excited about this because a lot of folks, are just used to ETFs and used to SPYs. You're entering trades usually on a platform that's nowhere near this slick. And when I say slick, I mean cool with functionality, feature-rich functionality. That's what I meant instead of slick. So yeah, I mean this is the alternative. This is the SPX. S&P 500 stock index. All right, how do we get entries on the chart? Okay, I'll repeat that again real quickly. Again, you can use these tools. You got the market order button here. It brings up a market order ticket in the middle. You could set a stop loss, an OTO stop loss or not. If you don't want to do it, you just put a 0 there. And then contracts 1, you buy or sell, it gives you the best available price. Second way is you click on the buy button if you want to buy. You drag to the price you want, wherever you want. Third way is to sell. You could sell, click the sell button and drag to whatever price you want. It's really easy. On the dome, on the trading ladder, I mean, it's equally as easy, right? You're going to go to the price you want to place the order. And blue is buy. I'm going to move my limit order over there. I'm going to place it. Red is sell. I'm going to move my cursor over and place it. And it's smart. It does that. It knows it's a stop. It knows it's a limit order. It knows what's going on. I'm going to right click, just one simple click with the mouse. So if you are using the PC, the Dome is a pretty efficient way to place trades also. So John asks, who is Infinity Clear? Our parent company is Transact Futures. They're the FCM in this case. They're the ones that actually own, operate the platform, operate the data feed. There's no third party. There's no finger pointing. It's all on us. So we're one big happy family. That's where your statements are going to be generated from. That's where your statements are going to come from. You're going to log into the Transact portal as a client. Everything's right there at your fingertips. Choose your charting options. Choose the data that you want. Choose the markets you want to trade. It's all really easy. So Transact Futures is the name. Okay, so let's go down here a little bit. So an OTO on the Dome, that's a whole course. But if you're going to do an OTO on the Dome, and you can do a simple bracket as an example. See, there's a simple bracket, auto check. You put your profit, loss, and stop limit in, and then you're going to go ahead and place an order. Once you get filled here on this order, then your bracket's going in. That's the OTO. This is the OTO right here, this one lot, 27.56.25. Okay, I have a lot of videos on YouTube which will show you how to do this. That'll take too much time to go through the whole functionality. The Dome is very feature rich also. Ronaldo asks, as far as your platform software is not locked into my house connection, right? I could bring a laptop to a hotel in Florida, Texas, Tennessee, and still be able to trade from the hotel room, right? Absolutely. Ronaldo, you can come to my house if you want. And you could trade, you could trade sitting next to me. You could do it anywhere you want. Absolutely. And then if you're doing server-side OTOs and OCOs, even better on the charts, then you could actually have a trade working and then leave and then show up somewhere else and place trades. Yeah, so Joey asked this question. The transaction cost associated with trading the micros properly is pretty low. It's pretty low. You have a situation where a commission's less than a tick it's pretty low in any market, whether it's bonds, E-mini S&P, NASDAQ. It's deep discount. If some folks overtrade and generate, crazy amounts of commission, which is usually not the good way to go. It might be good for me, but it's not good for you. I hope my boss isn't listening to this, but no, Jim Mooney's completely on board with that idea. Patience, you don't have to trade a lot. Your transaction costs are low. So it's not sad, it's unsad. It's way better than trading anything else. No hidden fees, none of that stuff. Trailing stops, a whole webinar. I'm not going to do it today. But yes, you could have trailing stops on either the trading ladder or on the actual charts themselves. Pretty straightforward. A lot of YouTube videos on them. I'll show you how to get to those. Jim says, could you explain why I must maintain my internet connection for an OCO order? Jim, you only have to do that if you're sending the OCO through your trading ladder. If you're sending your OCO through your charts, you do not have to be logged in. Well, you have to be logged in to send them, but you don't. They're still working when you log out. It's called server side versus client side. Some people prefer client side. They don't trust server side servers. Some people prefer server side. So you have the best of two worlds, whatever you want to do. Bob says adding trails to your mouse would make it easier. I apologize. I hear you. I know I'm not good at presenting sometimes. I'll try to do better. Because I know I like to wiggle. When I start talking, I wiggle the mouse and I start, because I'm thinking what I want to say. My hand has its own ideas. Perry asks, can we set up a chart on one computer and the ladder on another? You can. I would be careful with logging in twice, though. You can, for sure. But just be careful with that, because if you're logged in twice, you want to make sure you don't get double filled and forget about things that you can't see. Just be careful, but absolutely you can. Steven says, at this point, best, most informative webinar ever. Well, thank you, Steven. That made my day. That was very kind of you. I'll tell that one to my boss. Peter, unfortunately, no, we don't. Lou already answered that. Commissions and margins. Yeah, we had a slide on that. I'll go back to that really quickly. What time is it? Okay, we got like 6 more minutes, and then I definitely have to shut down. Careful with the margins. Where did it go? Early on, because I know I'm going to get that a lot. So right now, a classic E-mini day trade margins. And day trade for us means an hour and a half before New York opens up. So it's 7 o'clock Chicago time, 8 o'clock New York time. Hour and a half before New York Stock Exchange opens up, 7 a.m., and they're good all the way till the end of the day, 4 o'clock. 4 o'clock. And remember, the E-mini S&P, the stock index futures, close a good hour after New York, 4 o'clock Chicago time, 5 o'clock New York time. The regular close for New York, is 3 o'clock Chicago time, 4 o'clock New York time. And that's when I recommend most day traders kind of tone it down or be flat. It's like when you tell your teenager, nothing ever good happens after midnight. Usually nothing ever good happens after 3 o'clock. So just be careful. You could have some after-hour stuff. And not only that, there's a 15-minute pause from 3:15 to 3:30 Chicago time in the futures market. It's weird. It's like a 15-minute pause. Don't ask me why. Maybe Craig will be able to tell us. But that's something to keep in mind. And then night session starts, and then it goes and goes and goes until the weekend. Micros are $50 for the day trade. Again, 1/10 the size. It's all proportionate, and that's for all 4 of these. Okay, so it's efficient use of capital, but be careful. Don't max out. I've said this before. I'll say it again. Don't max out on leverage just because you can. Be really careful with that. Really careful with that. All right. John answered that one. Let me just scroll down a little bit lower. Kale asked, would you recommend, this is a great question, and this is kind of the whole, this is really the crux of this whole micro idea. Would you recommend viewing E-mini charts when trading micro, especially because of volumes? No, because when you're looking at a chart, the prices are the same. Remember the overlay chart I put up? The prices are the same. I mean, you might have a tick difference here and there, but it shouldn't make any difference in your trading. So when I look at an ES or MES, it doesn't make any difference to me. Now, when you add volume profile, you might say to yourself, well, the classic E-mini usually has more volume, so I want to look at that with the volume profile, and that's true. So if you're using a volume type of stuff, that's kind of true. And then you could execute in the micro because you know the prices are going to be the same. Does that make sense? Mo says, how can you tell if you are buying or selling? Also, how can you open more blocks? Okay, so I'm going to, when you're, the buy button is for buying on the charts, and the sell button is for selling. So that's how you know, right? So that's easy. Same on the market order button. Buy is for buy, green's buy, red is sell, and sell. And so practice in sim mode, Mo, to make sure you got this right. And then a position here that's an even number means you bought one. A position here that's a negative number means you sold one. Okay. So that's for the chart. If you're trading from the trading ladder, Mo, then blue is buy, red is sell. You move your mouse to the blue side, you're going to buy. You move your mouse to the red side, you're going to sell. If you're below the market, it's a limit order buy. If you're above the market, it's a stop order. Watch the videos, practice this in sim mode also, and give me a call. I'll walk you through it. Or come on over to my house. I'll show you how to do it. I was joking. I don't want 300 of you guys at my house. Actually, I wouldn't mind it. Walter, yes, we do accept IRA accounts. Yeah, so opening the chart, it's pretty easy here. When you log in, if you're logging in, you could either download the software on a PC and log in, and you'll get this rectangular board. Click on the C if you want to open up a chart on any symbol. Whatever your symbol is, click on a C, and it'll open up that particular chart in a web browser of your choosing. Okay, that's how you do it. If you want to log in, if you don't want to download it, you just want to log in from the web somewhere, you don't want to, you just want to use the charts, then you're just going to go to our website, go to trading, the trading tab at the top of our website, and go down to web-based. Click on that, and then it'll give you two ways to log into the web-based. Either demo, click here, or live, click the other button, and then you just type in your username and password, and then it logs you in. And then you'll see a chart right away. That's the other way to do it. Pretty straightforward. Joe, indicators here, download the demo account and see if any of these indicators meet your fancy. There's a lot of them. And it's all your usual suspects and then some. If there's a usual suspect that you don't see on this list and you want us to add it, call me. I'll get it added. Unless it's something so funky crazy. But if it's, if it's a reasonable indicator, yeah, we'll get it on there for you. But there's a lot of stuff on here. If you can't find what you're looking for here, you know something I don't. All right. I'm almost to the end here, guys. Tom asked, do you trade commodity futures, corn, soybeans, wheat, et cetera, et cetera? Absolutely. Any CME group electronic market that's liquid. Just don't ask me for butter or milk. No offense, Craig. Yeah, I know a lot of you guys are in here from Wealth Charts. Wealth Charts right now they're pretty cool. You're going to be able to trade with your Infinity account. through wealth charts. Absolutely. So that's awesome. It's almost ready to be released. You could actually place your trade from wealth charts into infinity. So probably by the time you fill out the account application, get going here, you know that might even be ready for you at that point. And while I'm at it, filling out the account application is easy. You go up here, open an account. It's like highlighted in blue. It's the only thing highlighted in blue. And click on that, and then you pick your type. You know, individual, joint, corporate, partnership, trust accounts, whatever you want. Or if you want to do an IRA, you got to use this button. Okay, it's pretty straightforward. A lot of requests for trailing stop. I'm going to do a whole webinar and video on trailing stops. So go to our, subscribe to our YouTube channel. This is my promise to you. I'm going to do, click on the little YouTube button, subscribe here. You'll get an email when I post a trailing stop video. I'll do a trailing stop video on the DOM, and I'll do a trailing stop video on the actual charts. Okay. I promise I'll do that. That's the YouTube. There's all sorts of stuff here too. If you're sheltered in place, this is the place to be, our YouTube channel. Guillermo, yeah, I could do that for you. Or no, wait, who asked that question? Christian, yeah, I could do that for you. YM, to add a YM chart, it's really easy. You're going to go up here to the left-hand side. You're going to type in YM. It's going to give you some options. You're going to find the one you want, YM, mini-size Dow, or you could use the micro Dow. By the way, it also thinks you might want the micro Japanese yen. But let's go ahead and click on YMO. And you click on that, and it'll repopulate the chart for you. You might have to adjust your histogram size on the market profile, on the volume profile, to make it easier to see, but it's really that simple. Perry says, how do I log in using the if icon? Well, you're going to have that downloaded on your platform if you're using a PC. Shoot that out to your customer service rep. They'll shoot back an answer to exactly how to do it. It's pretty easy. Get this guy off the couch. Exactly. All right. Mo, I'm going to call you and walk you through that question. We do it, David. We do have market profile, but it's called, go to studies, it's called Price Profile Plus. Price Profile Plus, and you could actually, once you're in the Price Profile Plus feature, you could make them number bars also, if you want number bars, for those of you who know what that is. Some weird thing somebody made up, but some people like it. All right, I'm almost done here. James, no, the DOM is a PC-based, not web-based. Ronaldo says he's ready to switch. You should definitely be ready to switch. I showed you the open account button. We will welcome you with open arms. By the way, 23-hour trade desk if you have any issues. So when the markets are open, you have a place to call. You also have a customer service rep dedicated to you. You also could talk to me. So, support's always going to be there. Our platform, in my opinion, is one of the most reliable out there in terms of uptime, in terms of data speed, in terms of functionality. And you know what? This is, my company. I'm opinionated, but anyone trading with, one of our other popular competitors knows what I'm talking about because you went down the last couple of days. Actually, a couple of our competitors. I'm not even going to mention the names. I don't want to get anyone mad at me. Sean, there are minis in the FX market as well. Absolutely. Thank you, Walter. That's very kind of you. DOM means depth of market. DOM, Robert asked, what is DOM? I got 3 more questions left and we're going to wrap it up. Depth of market. This is, because you see bids and offers on the, next to the actual, surrounding the last traded price. You see, let me just flatten this thing out. Flattens your friend. Get you out of your position. Cancels all your working orders. There's a 1 tick deep version and a 10 tick deep version. Remember, each price increment's called a tick. Each price increment's called a tick. So you see them 10 ticks down, 10 ticks up. That's the volume number in the bid column, the volume number in the ask column. We also have a version, if you want to save a couple bucks, that's 1 tick deep. That's all. It's just a nomenclature issue. It's not magic. The dome is magic, but the name isn't. Charts are free with 10 round turns. Otherwise, they're 12 bucks a month. Not a budget breaker. And I'm going to go down to the bottom. This is a futures trading platform. If you're trading over-the-counter Forex, we have to have a conversation. Over-the-counter Forex isn't as good as CME Group Forex, currency trading. Regulated exchange, first in, first out, no dealing desk, no marked up prices, no interference, 23 hours, we have an entity that, is a mammoth in this industry that is, the Globex trading system, which is what it's called, is fantastic. If you're trading cash Forex, call me. I'm going to talk you out of it. Okay, so next to the D, that just this little arrow next to the G just opens up a trading ladder or a dome. D stands for dome. You could have as many of these open as you want or as few of these open as you want. You could, if you have enough screens, you could have 10 of these open. Different markets. All right, I think I'm done with the questions here. Mike, unfortunately, no. All right, we got a lot done today. We did a lot. I really, really appreciate it. I appreciate your time coming today. I appreciate Rob Hoffman's help and Wealth Charts helping us today with the event. Have any questions, contact me directly. I'm going to leave open this last slide here so you can see the contact information. InfinityFutures.com, trade at InfinityFutures.com, telephone number, YouTube, Twitter, Facebook. We're trying to do more stuff on Twitter since we could instantly get information out to you. So if you're a Twitter person, follow us on Twitter if you want. Facebook's also an alternative for you as well. So everybody remember, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Be careful. Be careful with margins. If you're not sure about any of that risk stuff, give me a call. I'll be happy to talk to you about it. All right, and I'll go through the questions at the end. I get a report, and I'll make sure everybody gets an answer to their question. As Bill Northey, did you say Bill Northey? Of course I know Bill Northey. You must be from Oak Park or thereabouts. Yeah, Bill's in California now. I saw him. Really? Oh, okay. We could talk about Bill one of these days. Give me a call. Anyway, everybody, thank you so much for being here. Bill was a friend of my Uncle Paul's, by the way. So I'm a little younger, but I hear you. All right, everybody, thanks again for your time. I really, really appreciate it. Good luck out there. Be careful. Take care. Let me know how we could help. Oh, by the way, one last thing. Tell your friends. Tell your friends. Referrals are greatly appreciated. I should have said this earlier. My bad. Reach out to me directly or your customer service rep or the website. Take care.